All right, so the backdrop for what's been going on here is a relatively strong jobs market, of course, but that's the very thing, of course, markets fear, because it means the Federal Reserve is going to have to keep hiking rates. And we told you about companies demanding workers to get back. Well, they feel emboldened right now. They're in no rush to get back to the office. In fact, more than 1 million took themselves out of the workforce. So we have better than 11 million jobs going begging in this country. It is a weird environment that has the workers still having the edge, but for how long? We've got Steve Moore with us, Erin Gibbs, and Jonas Max Ferris. Steve, how long do you think they'll have the edge?
Well, good morning, Neil. Look, it was a good jobs report, no question about it. And you're right that the big problem right now for employers is that they're having a hard time getting workers back on the job. We're still about 3 million jobs below where we should be if we had a normal labor force participation rate. So that's a lot of missing workers. And this whole issue, it's going to be so fascinating, Neil, to see what happens after Labor Day is over. And companies like Apple are telling their workers to come back to the office. And there's a lot of resistance to that. But the big problem right now with respect to employers is falling productivity. We've had 2 straight months of very rapid declines in labor productivity. That is, how much are they creating on the job per hour worked? And part of the explanation for that, employers tell me, is their workers are not at the sites. They're not in the office.
And Erin, it doesn't look like a lot of them want to get back in the office, but those are the orders going out. And you've got other companies that are already laying off workers, and 3M and Snap, and hardly a trend, maybe the beginning of one. But the workers are the ones who seem to think they're in the driver's seat, are they?
For now, they are. I mean, when you still have 2.5 times more job openings than people looking for jobs, certainly the side is on the workers. I think we're going to ultimately find sort of a happy medium. From just sort of a general survey, it sounds like most companies are still going to ask for about 3 days a week in the office, sort of a Tuesday to Thursday, and you're able to work from home Monday and Friday. So I think there's still going to be increased flexibility from pre-pandemic, but certainly not the same flexibility that we had during the pandemic where you were at home full time. So I think we're going to find that happy medium. And certainly, as the unemployment goes up, as the Fed keeps raising rates, that might adjust a bit.
Jonas, how do you think this sorts out or doesn't? We're told after COVID, the world has changed. The way we go about our work will change. I don't know. I'm beginning to look at a lot of these developments and what companies are requiring, and now the pendulum swinging back to a slowdown and the possibility that more layoffs are coming. I don't know if that's such a guarantee. What do you think?
I think when unemployment goes above 4%, the sweatpants companies are going to go out of business, and all stocks are going to be down 90%, just like Zoom stock is down, because this work from home thing is gone way overboard. And as you've seen in the recent quarters, productivity is making major declines. Now, this is a very touchy issue with the Fed because they're trying to fight inflation. And a lot of that was just from handing out too much money, low rates and all that. But a lot of it is you're getting paid the same amount or more, actually, and producing less. And that is an inflationary concept. And if the Fed tries to fight that with higher and higher interest rates, when the fact is you're just at home not working as productively as you used to be, then we are going to have a serious problem in the asset market, stocks and real estate, because they're going to adjust down with higher rates. And yet that's not going to get you off your duff. So ultimately, the high unemployment rate is going to scare people. This last jobs report, we saw a lot of people entering the job force because they're starting to get worried that they got to get a job. And that was the good news in the job report, even though the number was higher. We need more people, a little less scared, a little more power in the hands of your employer. And it's anti-Labor Day, but less power in the hands of labor, basically.
Yeah, so Steve, for a lot of people who are spending a lot now, we're cramming those airports, one last dash to vacation spots, still spending strongly on a lot of leisure and activity like that. What does the fall look like to you?
Look, I am worried about where the economy is right now. I think it's, we're in a precarious position. For example, you were just talking about the Fed. So the Fed is trying to fight inflation by raising interest rates, whereas Congress and the White House are doing exactly the opposite. They're spending money like it's monopoly money, like it's M&Ms. We've got $4 trillion additional debt that they're just and spending, they're pushing into the economy, which is driving prices
you think
up.
you think that could be on measured time here, Erin? There are a lot of people who say that while the wind might be at the president's back right now with some of this uptick in activity and decline in gas and all that, it'll be short-lived. Where are you on this?
I agree. I think the government spending is certainly a concern because it's doing exactly the opposite of what the Federal Reserve is trying to do, and only making their job harder and potentially making those rates increase for a much longer period of time and making unemployment even higher. So I think 2023 could be a very rough year if we don't really try to balance some of this spending out.
Jonas, I don't know if we get to that point.
I would like to see at this point more tax increases and spending cuts to slow the economy down, as opposed to higher and higher rates, making the Fed do all the work. But White House has always kicked the job to the Fed, and that's why we get huge interest rate hikes and falling housing prices. The housing market's already sinking pretty fast, so I don't know how far that's going to go, but that in itself will slow the economy down. It's the biggest component of GDP.
Well, watch closely, guys. Thank you.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.